One of the biggest proponents and value of the new scoring model is that it takes into consideration your rent. Okay, now look, if I've been in the mortgage business now for almost 30 years, and we all know that someone's propensity to make their rent payment is a huge contributing factor to whether or not they're going to make their mortgage payment on time. And this is something that I learned very early on, is you could have somebody who might miss a payment on one of their credit cards here and there or whatever, but if they're making their mortgage payment on time, or excuse me, their rent payment on time, they're likely to make their mortgage payment on time. And the reality is people care a lot more about having a roof over their head than they might on having a late fee or even a 30-day late on their credit report if things are really tough. And so the average consumer has a propensity to pay their mortgage first and let their other bills, kind of stack up, if you will. I mean, if you only have so much money and you're going to pay something, chances are you're going to make sure you keep the house over your family's head, right? And so this is huge because a lot of people who have challenged credit reports by standard calculations probably pay their rent on time. And this might help a lot of people get into homes. But here's the thing, how many landlords are actually reporting someone's rent to the credit bureau? Well, I'll answer it for you. It's not very many. And really, it's probably only the larger apartment complexes that have, large management companies, et cetera, that are even reporting this information to the credit bureaus. I mean, your typical local landlord, or if you're renting a single family home from, just a landlord who owns just a handful of doors, the likelihood of them reporting this is very slim. So I'm starting to wonder, how much of an impact is this really going to have? And based on the research that I've done, there isn't a way for you to, for instance, upload a client's rental history and have that factored into the score. And the reason that would be important is because FHFA is going to use this scoring model in their automated underwriting system. So instead of using your traditional credit score, they'll use the VantageScore or the 10T, and they will reconfigure the AUS systems, the automated underwriting systems, DU and LP, to underwrite to these kind of new credit standards. But if rent isn't included because the landlord doesn't report it, I just don't know how much of a significant difference this is going to make for a number of people. And what we haven't seen yet is anything that's requiring landlords to report this information to the credit bureaus. So maybe that's something that, is coming in the future. I don't know. I've heard no talk about that. So it'll be interesting to see how that plays out. Now, one thing that I was thinking about is, you could... A couple things. You could counsel your first-time home buyers or your borrowers in general to ask their landlord about reporting their rent to the credit bureau. So if I'm a person who's teaching first-time home buyer classes, as an example, this is probably something I would start talking about, is to ask your landlord if that's something they do or if they would consider doing. My guess is there's also companies, I know there's companies that do contract collection, right? So if you have a private note between you and another party, oftentimes you can use a third party to collect those payments, and those could get reported to the bureau. So maybe people start paying their rent strategically through a third party that will report this information if it ends up making that much of a significant difference in whether or not you can qualify to purchase a home. So these are kind of the questions for me that are circulating around this VantageScore. I think it's very cool that they announced this just a few months ago via Twitter, if you remember, on X. Bill Pulte messaged about it, and here we are. They're having a press conference saying we're ready to start taking these. I don't think the industry is quite ready yet, and we really don't know what the impact is. But I will tell you, the FHFA seller guide for Fannie Mae and Freddie Mac has been updated to include the Vantage and FICO 10T. FHA is still a little bit behind, but they said within the next couple of months, they should be accepting them as well. But many of your lenders, if you're a broker or even if you're a mortgage banker and your company wasn't selected or you don't work with any company companies that have been selected to deliver these. We're probably still a little ways out from seeing this become mainstream, but it's definitely progressing. And look, I think that's probably a good thing, but also a lot of questions about how this is all going to work. One other thing to note is that I think it was Bill Pulte mentioned he had just literally at the time that he was doing this press conference on the 22nd here of April, mentioned that he was talking to the folks at FICO, and they supposedly are going to offer this new report for just this new credit score for just 99 cents. That's a pretty big savings from where it's at right now. Now, keep in mind when you're paying for a credit report through a credit vendor, you're paying significantly more than that. But right now, we're probably thinking about $10 per bureau, and we're talking now about maybe 99 cents. So that's significant. So it might help bring down cost of credit report.